Big news in the world of taxes. The One Big Beautiful Bill Act, or OB3, as it's also being called, became law on July 4th, 2025, and it's bringing some major changes, some of which even start this year. Let's break it all down and see where it applies to you. First up is probably the broadest category. Tax brackets from the 2017 Tax Cuts and Jobs Act are permanent. So the 10% to 37% tax brackets we have had for the past few years are now here to stay. Also very broad are standard deductions, which just got a boost for 2025. It will be $15,750 for singles, $31,500 for those who are married, and $23,625 for heads of household. Personal exemptions are now permanently terminated, but if you own a small business, qualified business income deduction is here to stay. One piece that we have eagerly been awaiting an announcement on has been the estate tax exemption, at least in our industry. So the exemption jumps up to $15 million in 2026, so there will be no sunset. But for 2025, it will remain at $13.99 million. This is a big piece in the estate planning world and a lot of what we help clients with. Here are some other key updates that may apply. Mortgage insurance premiums are deductible from 2026 onward, and personal casualty loss deductions are back if you are hit by a state disaster. The child tax credit, one of the most common credits, is now $2,200 with $1,400 of that being refundable. If you have a dependent who is not a child, there is a $500 credit for those dependents. Keep in mind the phase out starts at $200,000 for single filers and $400,000 for joint filers. The SALT limit has been enhanced, which has been another big piece that we've seen in the news. The SALT deduction cap is getting a big boost. So for years 2025 through 2029, it will be $40,000. But do keep in mind that this starts to phase out when your income is above $500,000.